what really allowed us to scale. It took it from it being like just kind of a small thing I did on the side. It came to the point where it was like, became the second most important thing I was doing. I became a mom, and then I just focused on real estate and also switched into multifamily at the same time. I think those two things were what allowed us to scale from 5 properties in 5 years to now 177 doors that I'm managing. So I was able to raise the capital before even, putting it under contract. And I think some people might think, well, that was easy for you because you just partnered with Marcin and just went along in his deal. Yes, I did partner with Marcin because you first need a team, right? You have to get over doing it all on your own, which was what I was doing with my 6 and 8 plus. You need to find ways to partner with others, and you need a team to be able to do that. So just like being there on the ground, but also being connected to people in person was a main reason why I am where I am today.
Zorya is somebody I've gotten to know over the last couple of years quite well. She has been one of those people that, when somebody just grabs onto something and just doesn't let it go and sticks with it all the way through. I think Zorya is probably the epitome of that. We've had hundreds of people go through M1 Inner Circle over the years and successfully execute, but few have done it as consistently as I've seen Zorya do it. So I wanted to make sure we had this opportunity to do an interview with Zorya. When I met her, she was buying, I think, 4plexes or 8plexes. Most recently, Zorya and I partnered on buying a 144-unit apartment building together. So Zorya, without further ado, first of all, thank you for taking the time to do this interview, and really good to have you.
Thanks for having me here. Yeah, it's an honor.
But for those of you who don't know you, Zorya, tell us a little bit about yourself. What did you do before? How did you get into real estate? And just a little bit of background.
Sure. And first on that, like holding on and not letting go, because I feel like you can't fail if you don't quit. I'm a former engineer. I did engineering for 7 years. It took 5 years just to start my career, but I really just was not passionate about it. I was extremely bored at my job. I don't really tell people this, but it's embarrassing. But I would just walk around the halls with a piece of paper, just pretending I was doing something, because I had to stand up from my desk. I just couldn't stand sitting there anymore. So I would just pretend I was doing something. I took a walk to the lab around the office, but I did have kind of real estate on the side. I think that's what really kept me going. But what allowed us to scale, my husband and I, was that point where I took it from it being like just kind of a small thing I did on the side, not even like a hobby, but the thing I did after my job and my hobbies and all my volunteering work and everything. And then real estate, it came to the point where it was like, became the second most important thing I was doing. I became a mom, and I did that. And then I just focused on real estate and then also switched into multifamily at the same time. I think those two things were what really started me, just allowed us to scale from 5 properties in 5 years to now 177 doors that I'm managing. And that's only really been over the last 3-4 years that I've kind of jumped from 7 to 177.
What was your first deal, like your first investment property that you got into, or what did that look like?
The very, very first one, I would say that was like the condo that Patrick and I bought, and we didn't know anything at the time, and we did everything wrong, and we didn't use a mortgage broker, didn't use a realtor, didn't get it appraised.
Okay. You just check everything, right?
We just bought something from a friend of a friend, and they said it was $210,000. We're like, okay, here's the money.
Well, how long ago was that? I laugh because I did something similar. How long ago was that, Zorya, for you?
That would have been 13 years ago.
Yeah. When I bought my first property, call it, 18 years ago, realtor showed me one deal. I bought the deal.
Yeah.
Like the one he showed me, literally, I showed me one property. I'm like, yeah, it looks like a house. Let's do it. Because you don't know what you don't know. Right. And for me, that was 18 years ago. You was 13. Okay. And then when was your first multifamily deal? When did you do the first one there?
That would have been in 2019. We took possession of it in 2020. It was a brand new build.
And was it a 4plex, 8plex? What was that one?
That was a 6plex.
Oh, okay.
But I didn't know that I was going to do that right away. Actually, my goal was to buy like a 12 to 20 unit existing multifamily. Looked at those kinds of deals for the longest time. Walked away from a few because they're just in poor condition and couldn't get the price we wanted. But I kept my options open, kept being open to what's out there. And then it just like the sixplex came across my desk basically. And I said, well, that makes sense because I understood commercial financing by that point and knew that this made a lot of sense. Even though people were actually buying those using residential mortgages, they'd get 3 residential mortgages to buy this sixplex. But I was like, well, that doesn't make sense. Let's just put a commercial mortgage over it.
Very cool. And for that deal, did you guys raise any money? Was it all you guys? Like, how did you guys structure that deal to get it done?
That first one, it was a combination. First, that's what I tell people, like you kind of have to have a little bit of your own money to put in the deal first. It's pretty hard to just have no money and raise capital for your very first deal or first multifamily. So we ended up putting our own money in, but then we did raise the capital later and basically paid ourselves back. And now we have none of our own money in that deal. So we had to raise probably like $240,000 for that one.
Cool. So hold on, you guys did the deal with your own money and then you then got investors in, or a combination of both, or how did you guys structure it?
So we were able, because it was a longer timeline, it was a brand new build. So we basically put it under contract. And then we had a year before we actually had to come up with the rest of the money. We had to put a down payment down. So we put the 10% down of our own money. And then we did have to come up with a little bit more at the end. But during that year, that's when I really focused on like my raising capital skills. And I think that was in that year that I joined M1 as well. And I was able to just raise the capital and then replace our money with the investors' money.
Walk us through the process, because I mean, to some people who never raised money before, they're like, hold on a second, you did it, but then you replaced, like, maybe walk us through your learning curve there, because even saying it for the first time for some people, that might be like so just maybe give us a little bit of insight into how you, because what I heard is you used your money to tie up the asset, and then you created an opportunity for other people to come in to partner with you, and then you got, it sounds like some, or if not most of your money out.
And remember, like this wasn't my very first deal ever. I had done joint ventures in the past. I did about 5 joint ventures to that point. So, and by joint venture, I mean, I partnered with one other person and they put in the money and we did the work. And so that was kind of my first experience of raising capital, but still that was not a lot of money. This was the first time that I was actually bringing in multiple investors and raising capital from not just friends and family. So yeah, we were able to just put the deposit down with the builder, our own money. And then we created a corporation and we were able to sell shares in that corporation, kind of bring in the investors that way. But it was like a process because a lot of people, they don't, if this is like your first multifamily, it takes some time to build that trust. So we were able to bring some investors in while it was being built. And then our last investor actually came in after we closed. But we made sure to work with our lawyer to structure it in a way that we were able to do that. And we actually weren't selling our shares. We were just selling the outstanding shares. That makes sense.
Right.
But yeah, we worked with our lawyer to make sure that we could actually bring in people really easily after the fact. And one way that we had to do that is we had to guarantee the loan. So we weren't bringing in guarantors later. We were just bringing in capital investors. We had that piece covered.
First investor, first conversation. What did that look like? For
that, really was someone who I'd known for a long time. But then I had then recently just found out that they actually had other commercial property, like a strip mall. So I was like, well, that's interesting. So obviously they understand real estate, they understand commercial real estate. And I already had that trust with them. And so, but it still took quite a few conversations to get to the point that they were willing to invest. But I think the fact we locked this one up when it was like really, really low interest rates because they understood commercial financing. They're like, yeah, this makes sense. And so it took probably one coffee meeting and then another time meeting with them in their home to talk about it. And then I followed up with them and then they were in. But it took a lot of work up to that point, I think, to have like the confidence and the skills to know what to say and know what to present to them and not overload them with information, which is what I used to do. And then that taught me not to do that. Don't send them the spreadsheet. Just give them that.
The engineer was coming out.
I think I lost a few people doing that in the past.
Yeah, and you do share information, obviously, that's timely, but also relevant. And that's the emotion, that's the most important part. So obviously, aside from oversharing and overwhelming potential investors out of the gate, is there anything else that, because I want to segue eventually to how you went from buying, 6plex to then, ultimately now partnering with me on 144 units, because that's quite a transition within a fairly short period of time. So, but before we get into that, on that sixplex or the property after, was there anything else that, knowing what you know now, you would have done different in the context of either putting that deal together or raising capital?
Like up until that point, I made a lot of mistakes. I would have not, we like learn a lot. What you teach is like to ask people questions and not just talk and talk. And so what I used to do is just like, it's embarrassing now, but I would like, we met for coffee with a former coworker once, and Patrick and I, my husband, we pretty much talked at him for 2 hours. And it's crazy now because I would never do that now. But yeah, it just like, I felt that the more I talked, the more facts I would provide, the more I would convince him to partner with us. But that's just the opposite of what you're supposed to do, right? You want to keep it short and you want to ask questions, not like have us all these papers and like go through them.
Yeah.
So
what about on the deal side, Zorya? Is there anything else, anything in hindsight? Because there's people on this call, I recognize people that are maybe buying their first multifamily, or people that are already operating with, 100 plus doors. Is there anything that you would suggest to people from a deal structuring or negotiating standpoint that you would have done differently from what you've learned over the last couple of years?
on the deal side, I know I just like, as far as multifamily, I would have started looking at multifamily sooner. I think I almost wasted 5 years just doing like single family. But as far as structure, that's kind of evolved over the time. And so what I would have done differently for my first one was paid myself. So sometimes you have to do what you got to do to get the deal done. But I think I could have squeezed in an acquisition fee in there instead of just taking equity. But I would have done that from like a.
So I laugh, and for those of you who have done a few deals and you know exactly what Zorya and I mean, is that you're very eager to do your first deal or first couple deals, but what starts as, oh, we'll be in and out in a year, turns into 3 years. What is 3 years becomes 6. I've rarely do deals finish before you think, but they usually finish well after you think. So in whatever context that is. So, building in, and one of the things that we teach is deal structuring, how to build in fees legally, compliantly. You got to disclose them, all that other stuff. But that's an important attribute to creating a model that's sustainable, because you also, think about it from the investor standpoint. You also don't want your real estate partner also having to work a part-time job somewhere else just to pay the bills while this deal comes to fruition 2 years later, right? So that's an important piece. I made the same mistake once in a small way and once in a big way on a fund that we did, and once in a small venture. But you only have to learn the lesson once or twice if you're super stubborn, like I guess I was. So that's a really important piece there. Zorya, thanks for sharing that. So you bought the sixplex, and then you bought another sixplex or an eightplex, or what happened after?
Yeah, once you do your first one, it's a lot easier to do it again. So then I bought 2 more sixplexes and an eightplex in the same year, and raised capital for all of that. That was with none of our own money. Was able to, I had the experience from that first one. People already saw that had a bit of a track record just by doing that one. And I knew how to structure it. So I was able to raise the capital before even putting it under contract.
Because when somebody hears, I was able to raise the money before I had the deal, how did you do that?
That, I think it would mostly contributed to me putting myself out there and telling people what I did. And so I started doing webinars about my first sixplex. I also did a webinar about, other deals. There was like a 16 unit and a 20 unit that I put under contract that I walked away from. So I just kind of put out these educational webinars out there, which was completely out of my comfort zone. It's not what I would prefer to do, but that's what I had to do. And so, because I had to let people know what I did, because that's one thing we did not do the first 5 years was we're just going to do it in secret. Nobody really knew what we did. So yeah, I think that is what let people knew it. And then people wanted just to do the same thing. And so we started having conversations about how we could partner together.
Interesting. And then, so your first couple webinars, how did you decide what to talk about, how to structure it? Because there's people on this call that are probably thinking, I saw a few heads nod, yeah, I should probably do a webinar. How did you structure your first couple? Like, how did you get the framework together for yourself to even know how to have that presentation?
Like, I just did it through Zoom. Like technically it wasn't that hard to figure out. I think the biggest thing I just gave myself, this is how I do a lot of things. I give myself a deadline. I put it out there into the public and then I'm forced to do it. So I started advertising about it. I think all I did was create the advertisement, like the post about it, picked a date, scheduled it in Zoom. And then as the date approached, then I would, create the slides and prepare for it. That's how I get things done.
You know what? You create a deadline for yourself. You magically make it work. I don't know about you, Zorya, but when I was in school, you get an assignment from a teacher and you get 3 months to do it. Well, guess when I'd start? A week before, the night before it's due, right? All of a sudden you become a savant. You just become brilliant, right?
Yeah, you all have motivation.
Yeah.
There's some people that start right at their beginning, and then there's the whole spectrum. But over time it's become at the end.
Yeah. No, excellent. Okay. So you started doing the webinars, you started doing the outreaches. How did your team and the people you surrounded yourself change over that transition from those smaller deals to the bigger ones? I mean, as an example, even capital raising, right? I'd imagine like when you started raising money, you start dealing with different lawyers, different paperwork, making sure everything's compliant, accountants. Maybe touch a little bit about that, because it really does frame out the person that effectively you've had to become over the last couple of years to be able to do what's required now, right?
Yeah. Then that has changed. Kind of first is the team that you're working with, kind of like working partners, and then, the professionals that you hire and work with. So that, well, obviously when you get into multifamily, it needed a completely different team who understood multifamily and commercial transactions. So I had to switch lawyers, accountant, have to switch bookkeepers, but I was probably different than most, but I had a team from the very, very beginning. When we started. So even before we had our condo at the time, and we were about to buy our very first rental property, we actually had a realtor and a bookkeeper and a property manager before we bought our first property. Which is not typical, but I don't know. My husband and I were both working as engineers, and we're just like, we knew we had no time to figure out property management. So we're like, we'll just give that to somebody else. We knew that we would have enough time to either learn property management or learn how to partner with other people. So that's what we tried to focus on, so that we can not just do 2 deals with our own money, but then continue on and go. So from the beginning, I did always have a property manager, a bookkeeper that I was working with. And it did have to shift over time, bringing people that were, of course, familiar with securities and corporate structure. Don't try to figure it out yourself.
Well, I can tell you that it does. My wife and I had a daughter here 18 months ago, and you hear it takes a village to raise a kid. It takes a village to buy an apartment building. So you really do need to have smart people around you, because there's no way to know everything about everything. By the way, guys, if you guys have questions for Zorya, just type them in the chat. There is no way to unmute everybody else, so just type them in at the end. I'll kind of just go through the questions and see. Even if something prompts a question, just put it in the chat. We'll kind of go through it at the end as well, just to make sure you guys get value out of this and get your questions answered. My next question for you, Zorya, was going to be in the context of, okay, so you bought, the 6-plexes, the 8-plexes. How did you decide so I guess more curiously than anything else, did you invest? Because you live in Edmonton, for those that don't know, Zorya, she lives in Edmonton. Was your decision to invest in Edmonton driven largely by the fact that you lived in Edmonton, or were there other factors at play that helped you kind of make that decision?
Yeah, it was mostly from that we lived here. Like when we very first started, it was like a hot market here. It was the place to be. We lived here, so it was a pretty easy choice to just invest here. And then once we had a few properties, we just continued buying here. But then we kind of came to the point that we don't really want to have all our eggs in one place, because when Alberta is cyclical and when things go into a recession, all your properties go down or all your rents go down.
Right.
So that's why for a while, I've been wanting to expand into different markets. Even though Edmonton is a really good place to invest, personally, I wanted to diversify a bit.
Okay, so you and I are obviously partners on a deal in Texas. So what gave you the confidence to, number one, go cross border, and number two, why Texas? Why not Cincinnati? Why not? So how help? I mean, I have my biases, obviously, and I think everybody's very clear on my biases. But just from your perspective, Zorya, How did you walk us through your thought process in terms of how that made sense and what were some of the things along the way that gave you some confidence?
I had always wanted to get into the US for like the price point and cash flow and those advantages. And then I actually was pretty just open to where I would want to invest. Obviously, like I wanted to stick to landlord friendly states, just like I'm in landlord friendly province now. That was like my main criteria. And it has to have like people have to be moving there, like has to be a growing market. But then yeah, I wanted to be open. Yeah, honestly, I wasn't. Yeah. And then when we kind of decided on Texas, or we found an opportunity, to further look deeper into Texas, like I was completely on board with that because that was, even though I didn't even know too much about Texas actually from the beginning, but once I learned more about what was going on there and then, visited Austin and Houston, spent some time down there. It just made sense. It kind of felt like Alberta in a lot of ways. So that's why, that's what made me the most cool with it.
So lots of pickup trucks. For those of you on the call here, if you're Ontario, Canada, Texas is very Alberta. If you've been to Alberta is very much kind of like a leave me alone. I'll do my own thing. You do your thing kind of thing. It's more of a independent. There's a strong independent streak in Alberta, and Texas is definitely lock in step in that way. In some ways, we're the mini Texas. In that regard, from a perspective standpoint, give us the context and the learning curve. So you obviously have to become somebody different to go from your single family acquisition, your condo, and maybe some of the other stuff you did to your your multifamily in Canada. What was the next growth phase for you in terms of your personal development to become the person that could now be an asset manager of, a 144 unit building?
Yeah. I wanted to go through that journey because like, I think a lot of people can kind of picture themselves getting to 6 or 8 doors, but like, how do you go bigger? Like, what does that take? And the biggest thing was, for me was learning the skills to raise capital. Like, let me step back. So first of all, everyone knows like, partnered with you on this 144 unit. And I think some people might think, well, that was easy for you because you just partnered with Marcin and just went along in his deal. But I just want to say that that's how we kind of came to that point. Because first of all, yes, I did partner with Marcin because you first need a team, right? You have to get over doing it all on your own, which was what I was doing with my 6 and 8 block. You need to find ways to partner with others and you need a team to be able to do that. So whichever way that comes together, you need that team. And secondly, I think for me, the opportunity was actually like available to a lot of people. Almost any, like you could probably agree with me, almost anyone in M1 kind of had this opportunity potentially partner and get into larger deals. But only I am here in this position with having like a crucial role in the deal and still here kind of at the end after we've closed. And I would say that like 3 main things have contributed to me being able to actually get to this point. And that's first was having something to contribute to the partnership, right? You can't just tag along on a deal. Like you have to be able to add value and contribute in some way. And for me, that was my ability to raise capital. And then my second ability to be good at asset management. So I think without both of those, I wouldn't be here. And so kind of joining M1 and learning how to raise capital. And now I think I've like at 1.6 million that I've raised, but that is kind of the key that allowed me to have something to contribute to the team and stay on the team and have that role. And then the other thing is I know what I wanted, but I was open to how it would all come about. So I knew that I wanted to get into the US. I wanted to do bigger deals. Like I had mentors and people that inspired me that I looked up to, and I kind of knew that was the goal, but I was pretty flexible, you just could say, on how I would get there. So that's when an opportunity did appear to be part of a deal, I jumped on it because I knew that was a way that I could potentially reach my goal. And the third thing that I think contributed to it was delayed gratification. So being able to put the ability to just not get rewarded right away, but put in the hard work, put in the time, put in the learning, do what you need to do, and then eventually it'll pay off. But having that ability to wait is also what's kind of fun to me to where I am.
Well, and Zorya, to your point, We got Nick Skalkos. He's our partner as well. He runs investor relations with us at the U.S. Value Add Fund there. And we've got Evan McLeish, who is actually on the acquisition side with this acquisition here as well. So I think I'm not sure if there's anyone else here from the team. I can't quite tell, but everyone that's on the team, Zorya, how long did it take us to buy this building? Just out of curiosity. You talk about delayed gratification.
Yeah, over a year.
And were there other deals we could have just bought in the meantime?
Yeah, absolutely.
Yeah. But why didn't we?
Yeah, it just wasn't the right deal.
Right.
We're not going to put our own money and our investors' money into something that is not going to work, and it's too risky, right? Even though we could have closed on it. And
yeah, there were multiple deals we could have bought prior to closing on Ashwood Park Apartments. But believe me, when I say this, guys, sometimes the best deals you do are the ones that you walk away from, because all it takes is one really, really crappy deal that you shouldn't have done that will occupy your life for years, and you knew better. If it doesn't feel right, you just walk away. Even if you can't articulate why, you just walk away. That's always been my policy. Anytime I haven't listened to my gut, I had to write a check. And that was an expensive lesson. So for me, my gut is, doesn't mean you're always right, but 9 times out of 10, your gut's trying to protect you from something. So, listen to that piece there. So Zorya, maybe let's kind of switch gears here a little bit. The capital raising experience, that obviously being able to contribute capital, whether it's sweat equity, your capital, bringing some investors, all the above, in addition to having a finite skill, is what makes you, a viable member of a team. But after that, you mentioned that process to getting that acquisition. How is your presentation or your presence to investors evolved over the last, call it, even 6 months, when you're out there now presenting yourself, compared to even when you and I met a handful of years ago?
Yeah, it's changed dramatically. So it's funny, before I met you, I was trying to raise capital for a 20-unit building. I was trying to raise 800,000. My mentor at the time, saw that we were kind of struggling with that, and said, introduced me to you. And I initially thought, great, Marston's going to raise this capital for me. It's going to open the close. Little did I know that's not the case. You have to raise your own capital. But what was good about that is, I was able to learn the proper process to do this. Or actually, sometimes like a proper, a process, right? I really didn't have a process before. Yeah. I didn't know what to say. I just kind of winged it. We would try to put on a webinar. We put out a few emails, and then nothing came about it. I think the biggest thing is having that warming up. I kind of have a list of potential investors that they can go back to, and then actually having a process for going back to them and letting them know about your deal, and kind of the things we talked about before, not overwhelming them, sticking to kind of the highlights, and then saying the key words that you say when doing kind of the easy script, and kind of getting that initial yes or no from them, and if you're wasting your time or not. Yeah. That key thing of if everything checked out, how much would you be interested in allocating? And just being comfortable with that verbiage and practicing that really helped me actually get the commitments.
So how have you gotten, because I hope you don't mind me asking, but how have you gotten comfortable being uncomfortable? Because you don't exactly have a public speaking background. You don't exactly have a I don't know if you ever sold newspapers door to door when you were a kid in the summers. I don't get that vibe from you. So for those here that are listening or watching, and they're going, okay, that sounds good, but here's my personal issues. How do you continue to work through those things? What's some advice you give everybody?
Yeah, I'm glad you asked, because I am the last person that you would think that would be good at this. I'm 100% introvert. I used to never be able to speak to even a group of 10 people, or even stand up and say my name. I would be shaking. The public speaking journey has been kind of, for 13 years, it's a matter of constantly doing the next scary thing, not just jumping into webinars or doing presentations in front of people, but just whatever is kind of just a little bit more outside my comfort zone compared to what I had done in the past. So just doing kind of the next bigger thing. And I have constantly been doing that literally for 13 years, because I knew that that's the only way I could do it. And then after a while, it builds on itself. You're okay, well, that was scary, but I did it. You build that confidence. You go on to the next scary thing. And That's kind of, you have to be uncomfortable just a little bit.
So Zorya, how much prep time did I do with you for this webinar?
Yeah, like 5 minutes. I'm now like so much more comfortable in these kind of things than I used to be.
Yeah.
I would just be
Yeah.
shaking, but it's like I was just, and saying just yes to things that you may just not want to do. So like
Yeah.
I would put on podcasts, and having a mentor, like my previous mentor and you, and pushing me to do things, and it helps a lot.
Yeah. Have you, could you imagine 2-year-old you, not 2-year-old, but 2 years ago you doing this type of a webinar, talking about what you're talking about here today without a script, without any prep work?
It'd be a lot harder. Definitely,
Yeah.
5 years ago, I would just say no.
Yeah. So it's you've evolved quite a bit. And here's the thing is that I've gotten to know Zorya quite well over the last couple of years. Her competence, her ability to do what she's good at has evolved, but not in proportion to her ability to communicate what she's able to do, if that makes sense to you guys. So a big part of her growing and becoming the person that can now manage almost 200 units and growing is a big part of that, is learning how to communicate.
Yeah.
Largely,
It's
that's
not
really what
even
it's been.
not even to investors, but like when you're starting to work with a team, like larger multifamily, you have to have a team. There's no way you could do it without. And yeah, being able to communicate with your team. We have now weekly meetings with the partners, and then another meeting with the property management team and the on-site team. And yeah, I wouldn't have even been comfortable having those meetings like 10 years ago.
So Zorya, maybe share a little bit behind the curtain here. What is the difference? What are the not so obvious differences that you didn't expect between managing 144 units versus an eightplex, as an example?
Not so obvious.
Well, that weren't obvious to you, that you stepped into it and you're like, oh, this is different.
Yeah, I think it's the amount of people you need, which I knew, and you need to make sure that everybody's in the right roles, right? Everybody has to take a different role and be good at that role. And I kind of knew that, but I think it was still something that, like, I don't know, it was still like something that I realized even more, I guess, when we took possession and started working together with an on-site, and just how many little things there are to do, that it just made it very clear, like it would be impossible for you to even like almost a team of 3 would be really hard to take on a building of this size. Like I'm saying, like in the partnership. The other thing, same time, it's much easier to manage 144 units than would it be to manage like 144 single family homes. So like, or
Yeah.
even it's almost it's similar even to the rest of my portfolio, which of 33 doors. It's actually, a lot simpler when you have that right team in place to manage more. And I feel comfortable even to take on another building. Like after the first few months is a lot of work getting everything onboarded, and but after, I feel like within a month or 2 now, I would have the ability to take even another property of probably 100 units, because I've got the systems in place, and it's initially a lot of work, but then you kind of get it stabilized a little, and everyone knows what they're doing, and you got a rhythm, and then you can do something else. But you can't. That would be way too much work if I did that in like bought 10 eightplex. I don't think I could just take on 10 eightplexes next year.
No, I think you've been spoiled now, and I don't think you're going to go back to doing eightplexes. Because look, here's an example, guys, and I know this deal quite well. So just because I know we're working through this right now, about a third of our units have washer dryer hookups, and down in the U.S., you charge for that for washer dryers. 5-acre, 5.5-acre property, you don't want to walk across a parking lot with your laundry, especially if you're, not keen on doing your laundry, publicly at 7 p.m. or 12 midnight or whatever it is. So you'll pay the extra money. So here's an example: 50 washer dryer units that we can put in the units on average. Let's just say we charge $50. Zorya, is $50 fair? Is that the right amount?
$50 is that's what everybody's going to be paying.
Okay, so that's an extra $2,500 per month. $50 times 50 units times 12. That's $30,000. So that's $30,000 in additional net income. If you take let's just say a 6 cap, which is very conservative, I think in Houston, especially that market, that's a $500,000 bump on the valuation. So you can push a $500,000 to the bottom line on your balance sheet when you sell, and 30 grand a year in net income, which is just pure profit. Those washer dryers will probably cost us 30 grand. for, maybe 40, whatever, but 30, 40 grand, you get your money back in a year. And then that 500,000 stays on the balance sheet. You guys understand? Like that's huge. Whereas in an eightplex, yeah, you'll get an incremental, let's just say you did the same thing. Your increase would be, I don't know, maybe 20 grand in value, 25 grand in value. It's still great, but it's the same effort. You still got to deal with the trades, the contractors, you got to negotiate, you got to deal with whoever you got to deal with. So when Zorya means that it's a lot easier to manage 144 units, that's just a small example of that, right?
Yeah, that's a good example. Yeah, you're just doing it over a lot of units at the same time. Saves a lot of time. And yeah, and now we're actually saying like it is true. People really want those washer dryers. They're going to be brand new. Like we have a waiting list already. How many people need to live in.
Yeah. So what's next for you, Zorya? What's the next growth? I know you're in the middle of it right now. We just internalized these 144 units a few months ago. But what do you think that next piece for you is on a personal development side to continue to evolve and grow and become more of that person?
Again, still, I have always kind of the ultimate goal in mind which is really it's not a number of doors or a number of assets under management. It's the ability to go on vacation for 6 weeks. That's the ultimate goal that I stick in my mind. And I'm, like I said, flexible in the way that I get there. And at this point, I'm still trying to figure out do I buy more, properties in Texas, Alberta? Do we do both? But I think the main thing that's going to stay is I know I need to keep being connected with other investors, being part of a community. That's kind of what has gotten also to where I am today. Like without trying to do this on my own would have never worked. So not just getting the education, but being surrounded by other people and being as close as possible connected to other people that are doing what you're doing. So I'm also in other groups where, I'm really actually it began as a Facebook group and then evolved into a weekly Zoom call. And now it's a WhatsApp chat, but I'm connected with other people who have like 100 million assets under management. So being connected to people like that who are further along than I am is what I'm going to continue doing, continue working on my growth in public speaking and my skills in management. So yeah, I'm just never going to stop learning. That's something that's not going to change. But the actual strategy, still to be determined.
So more of the same. That's
More
completely
multifamily,
fine.
that's for sure.
Yeah. Well, once you guys find your game, once you find your niche, doubling down on it is the obvious answer. It really is. So, good on you for saying that, Zorya. That was a test because if you're going to be like, oh, we're going to do this, we're going to do this, we're going to do, oh, like you find your lane. You can focus on it. You find your lane. There's beauty in simplicity. There really is. So that's exciting. And then Zorya, last question before we do the Q&A here. If any of you do have questions, by the way, please type them in. Zorya, we'll go through them here. Wanted to leave some time. How important would you say getting boots on the ground is to your personal development? And I say that in the context of getting out there. Like when you and I first met, we would tour properties, get out there, walk 100, 200 unit buildings. How important was that for you to develop your conviction and your confidence?
Yeah, that's a good question. I think that was like one of the main keys and main things that actually opened up the opportunities for me is actually getting out there, going to Florida on the boots on the ground, actually being connected to people in person, not just going to Zoom calls and doing everything virtually. So just like being there on the ground, but also being connected to people in person was a main reason why I am where I am today. And also, walking those properties, it's new the first time you do it, but then it's kind of it becomes normal. You have to start doing that kind of stuff to become.
You normalize the activity, right? You start to. I talk about this a lot. Your reticular activating system, your RAS, that piece in your brain that tells you what's important. You start to notice things. Like, for example, when you're shopping for a new phone, you notice everybody's phone. When you're shopping for a new car, you notice all cars because at that moment, your brain is telling you that, hey, this is important. We're trying to figure something out here. So you start to pay attention to phones or cars. In our context, it's apartment buildings. So Zorya's, I'm going to throw this out there. I bet you're at a point now where you see apartment buildings that you're just casually walking looking, and you start paying attention to, well, how's the roof? How's this? How's the pool? How do they set up secure? Like you notice these things in other people's deals, right? It's
Yeah.
like hardwired in. And now that you know what to look for, it's so much more obvious today than it's ever been.
And you get so much more comfortable with larger deals, because before
Yeah.
I would not even tell my friends or even mention that I was looking at a 20 unit building, because that was crazy. That's huge. But now it just, the more you're surrounded by the people, the actual property itself, you analyze those kinds of deals, just becomes more normal. And now it's like, yeah, I would not look at anything less than 50 units.
How about on the capital raising side? Are you running around there asking for $10,000 checks or 100 grand or 500? Like it becomes more normal to ask for bigger checks too, right?
Yeah, that becomes more normal too. It's just like public speaking. Yeah, you raise this amount of money, and then it's easier to raise more. You've got that confidence, the experience, and then yeah, you don't waste your time on people who can only put you on $10,000.
And you guys, my dog has opinions on the topic, just so you guys know. So you guys, you obviously learn, you just normalize scale is really what you're doing, and you get much better. We call it solving for scale at M1, is you really learn how to solve for scale, whether it's that 1 to 10, 10 to 100, 100 to 1,000 units, whatever that is, you really figure out how to normalize there. So excellent. Knowing what you know today, Zorya, would you have raised money sooner for your deals, or did you do it kind of at a comfortable pace?
Yeah, I did it at a comfortable pace, but maybe a little bit too comfortable. Like my very first two properties we bought on our own, and then we basically had to start raising capital after that because we were out of our own money. I don't know what, I wouldn't really have done it any sooner than that. It's if you can buy your first property or even your first multifamily on with your own capital, it makes it easy to raise capital once you have a little bit of experience. So I think if on the capital side, I don't know if I would change too much. I would probably learn how to raise capital much sooner. Like I was fumbling around with it for probably 7 years until like more.
Wow.
Until I connected with you. So
yeah.
But learning the actual process, learning how to do that properly, I would have done that sooner.
Okay. Yeah, that's good. That's good feedback. A lot of people, when it comes to capital raising, they're what I call unconsciously incompetent. So they don't know, they don't know. So, it's one of those things that you don't know it until it gets jammed right in your face and you have a deal of a lifetime and you're short. And then you're just like, ah, and then you don't know, but then it costs a lot to fix it at that point, right? And that's the challenge. It's like not having a phone number for a plumber and then your house floods. Well, be good to have that phone number before, right? So how did you position your team, and how did you position how the investors would fit, I think is the question.
Yeah, well, even on those smaller deals, as far as like the active members of the team, it was really just me and Patrick. I would bring in, and then my investors were the passive partners. And I almost on all my deals, I've done like a 50-50 split where they would have the non-voting shares and I have the voting shares. I always guaranteed the loans so that they wouldn't have to do that. Yeah, I just positioned it as, this is a, easy, you don't have to put in any work. We're putting in all the time. We're putting up the kind of taking the risk.
So you didn't blur the lines between passive investors and I guess some people call them working partners. So you'd have you and your team, you'd execute, and then the investors, the expectation is just write a check and we'll keep you up to date kind of thing.
Exactly. Yeah.
Okay. So Harry had a question. Beside your past experience, how did you hone in your asset management skills for the 100+ unit property, especially through M1?
It's been the combination of learning from experience, also just learning from books and courses, and to some extent, like you can, but at the same time, you can't learn everything, before you do it. So you have to somehow find ability to kind of practice, like when I first started with my very first properties. I've never even learned anything about asset management before. I didn't know how to manage a manager, the property manager that I had at the time. But usually we just kind of jump in and do it. But you don't take on anything more than you think you can handle. Just off the deep end. But you can't learn everything, like say about swimming from a book and then go jump in and do it perfectly, right? You have to like jump in, not in the deep end, but in the shallow end and like start doing it. So
Zorya, any final thoughts and anything else you might want to share with the group before we sign off here?
I think the biggest thing in all of this is that having like the right mindset and having that like goal at top of mind and where you want to go is so important. And then just kind of learning the skills you need to get there and being open to opportunities. But putting yourself out there has always helped me to getting uncomfortable. And once you're around people that also are doing it, that gives you confidence too. So like you see the proof in them, right? So build that confidence in yourself too. So another final tip is I try to surround myself with people that are as much like me as possible. So I do surround with like other women, like successful women in real estate, because I see like, okay, if they can do it, I can do it. So if you can find that group or even a couple of people that done what you want to do, then start finding ways to get them in kind of like the top 5 people that you hang around with, where you'll become the average of those 5 people.
Yeah, you really will. I mean, ultimately, I've always kind of said it another way is you try to keep your circle of people as close to you as possible where they won't accept your excuses. Like, they just won't accept it. Like you'd be embarrassed to say that you didn't do something that you said you would do. Like you just disappear and go do it until it's done. And then you show your face when it's done. And you may have hated every moment of it, but the point is it's done. So, whatever that accountability group is for you, for a lot of people, it's M1. For some people, maybe it's your spouse. Maybe there's enough accountability there where, that's already a good starting point. Some people, it's industry groups, trades associations, but ultimately, to Zorya, to your point, I think this is a good place to close this off. Is a big part of you going from a handful of doors to, almost 200, and it sounds like you're probably going to be doubling, if not tripling that in the near term. A big part of that is the people you hang out with, the people you spend your time with.